So welcome guys. I'm really excited to go over this topic with you guys where today we are going to go over market structure, okay? And why I say this is very important for you as a trader is because I find market structure is a topic that we could talk about as a brand new person at the intermediate level and as well as an advanced level. But I feel once you understand market structure and you can see it for what it really is, it can completely change the game for you. Okay, so I'm gonna jump right into it for you guys and talk about the basic, intermediate, and advanced part of market structure and how we leverage this to be able to make money in the markets. Okay, so once again, if you're a co-host with me, help me with admitting people onto the call, which should be absolutely amazing. And let's jump right into it. So let's push this off to the side, guys. So we're talking about market structure. Okay, I need to understand the market moves literally in two directions. It moves up and it moves down. Now, when it's moving up, right, many of you know the market just doesn't move like this. It's not just going to shoot up in one direction, or it's not just going to shoot down. It's going to do impulses and retracements. So you're going to see it shoot up, retrace, shoot up, retrace, retrace, and boom. And the same thing occurs for when it's pushing down. Down, retrace, maybe get a smaller push, maybe get a deeper retrace, maybe get a long ride. But ultimately, you guys can see in which direction the market's going. On the left-hand side, it's going up. On the right-hand side, it's going down, okay? So in knowing this, the market on this side, as it's pushing up, what it is creating, ladies and gentlemen, is what's known as higher highs and higher lows, okay? So higher high and higher low. And we're just going to just literally copy it. So higher high, higher high, higher low, higher low, okay? So what I mean by that is this. The market starts here, it's pushing up, it creates a higher high, okay? Higher low, higher high. Why is it called a higher high? Because this high is higher than the previous high, okay? So this high is higher than the previous high. Then it retraces. This higher low is higher than this low. So it's still a low, but it's higher than this low. So we call it higher low, higher high, higher low, higher high, okay? Now, on the opposite side of things, over here, we're having the same thing take effect, but ultimately now what we are getting is lower low and lower high, okay? Lows and we got some highs. So going back to it, market's pushing down, lower low, lower high. Lower low, why do we call it lower low? Because this low is lower than the previous low, okay? Lower high, why is it called lower high? Because this high is lower than that high. Boom, lower low, lower high, lower low, okay? So when the market's pushing upward, ladies and gentlemen, what we are looking for on this side of things, we are looking for buy opportunities. I put it in big, bold letters. Over here, we're looking for sell opportunities. One thing you want to write down right now that's going to help you with trading is this. The trend is your friend, okay? The trend is your friend. Does that mean you can't go against the trend? Of course not. You can definitely go against the trend if you want, right? But you have a greater chance of having higher success by going with the trend. Now, here's why. If the market is, you guys can see here, if the market's pushing downwards, right? Lower low, lower high, lower low, lower high. If you keep trying to find that buy opportunity, you know what you're ultimately doing? You're trying to catch a falling knife. And you're trying to find the bottom. You're trying to find the bottom, and you're just going to keep stabbing you and stabbing you and stabbing you, and you keep blowing your account that way, right? So as I just draw this for you guys and showing you how we're getting the buys and we're getting the sells on this, let me show you guys how it looks to the average market, okay? So if we're looking here, you guys can see with your eyes well too, we're having the market do lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. Now look here. This low is not lower than this low. Okay? So when this happens, we're not looking for a shift in momentum or shift in direction. So now we can start looking for uptrend. Why? Because once again, on a downtrend, we need to be coming lower and lower. Uptrend, we want to be higher and higher. Okay? So when we get this scenario right here, what we have is this. Down, 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 down. And now we have this. Push up. You guys can see here, lower high, lower low, lower high, lower low, lower high. But now this low didn't take out this low. So now what this is looking like, we're about to start doing is higher high, higher low, higher high, higher low. But you don't just want to predict what you think is going to happen. Okay. One of the biggest tips I can give you when it comes to trading and understanding market structure is don't try to guess what the market's going to do. Just look at what the market is giving you and react to it. Okay. Don't try to predict what the market's trying to do. Just look at what it is and react to it. Okay. So now looking at this is going to help you guys with understanding it. So check this out. When we come back to this scenario here with the buys and sells, someone may be looking at the market and say, but Andre, I don't see an uptrend in market, right? You may see some time where someone on Instagram they're in a trade for USD JPY for a buy, but you're in for a sell. And you're like, but I don't get it. Why is it that they see a buy, but I see a sell? What this comes down to, I'm going to a whole new chart just to kind of shift the gears from over here. Ladies and gentlemen, when we're looking at the market, depending on the time frame that you're on, is going to be the trend that you see. Okay. So the monthly, we see it moving sideways. Let's go on the weekly. Look at this. On the weekly, we had, what trend is this? Type for me in the chat box. What trend does you see here? Is uptrend or downtrend based on what I just draw right there? And why do we think it's an uptrend? Why do we believe it's an uptrend? Why do we think it's an uptrend? You see, when you're looking at the market, you're like, okay, it's going up. Exactly. Someone says higher lows and higher highs. That's what you're looking for. Higher lows and higher highs. Like you guys can see here, we topped out right here, and then boom, lower lows, lower highs, right? We topped out, and then boom. When we take out this high, ladies and gentlemen, now it's okay. Let's identify and look for another trend. But while this is all occurring right here on the weekly time frame, we break it down to the daily, we may see something completely different. Within the daily, we're having uptrends, right? So understand the trend that you see is relative, very important, to the time frame that you are currently on. Okay, please write it down. The trend that you see is relative to the time frame that you're currently on. Okay. One common question I used to always ask when I got started was, but how do I know? What if I can't tell? You know what I learned? When in doubt, zoom out. When in doubt, zoom out. But sometimes you're zoomed in and all you see is this. And you're like, I can't tell what trend this is. There's not much happening. I need more data. And then once you zoom out, you're like, I'm seeing the higher highs, I'm seeing the higher lows, right? So what's going to help you guys understand this market structure is, yes, right now you see candles. You want to train your eyes to not be seeing it as candles, but see it just as straight lines, okay? You want to be able to see the market like this. Let me make this thicker so it's easier for you guys' eyes too. So pushes up, boom. Now we can do this. Pushes up, pushes down. You want to start viewing your eyes like this, seeing it in waves. I can even do this one right here too if I wanted to, but start seeing it as lines. Sometimes it's not the prettiest, but the most important thing is, are we creating higher highs? Are we creating higher lows? Right? And once you can say we are creating higher highs and we are creating the higher lows, now it's easier for your eyes to identify and say, okay, we're putting in higher highs, we're putting in higher lows. Now I know I'm looking for buys or I'm looking for sells. Okay? Type some twos for me in the chat box if this is starting to make some sense to you. Put some twos in the chat. This is making sense to you. Love it. So here's what's going to help you guys understand the market. Okay? There's two important things when it comes to learning the skill set of trading and becoming, I don't want to say mastering the charts, because you've never mastered this. Time and price. Okay? Time and price. Market structure is going to help you with understanding what price is doing at the moment, right? So you may say, okay, cool, the market's pushing upwards, I'm going to take a buy. But no, we got to understand as well, relative where price is, what time of the day it is. Okay? Always remember this. Time doesn't know price, and price doesn't know time. Time doesn't know price, and price doesn't know time. So let me give you an example of a setup that I'm currently in, okay? I think it's Euro NZD is one. So looking at Euro NZD, here's a tool that we have available on TradingView. I'll go on another whole other training with this, okay? This tool is called Sessions. So with Sessions, it shows me what time of the day the market currently is. So the first color is London session. In the middle, it's where London and New York overlap, and the yellow is New York. Maybe kind of fainted. Let me make it more darker for you guys, okay? Probably can see that a lot easier now. And boom, okay? So this is something you can start using yourself to train your eyes and say, okay, cool, relative to where price currently is. So for example, myself personally, how I trade is I trade institutional, yes, but I like to trade during London session with the euros or the Great British Pound pairs, okay? So if I'm looking for a setup, understanding where price is important, but also want to understand, I want to execute my trades during London session. I'm looking for it to take off during London session. So in looking for this current setup right here, the market finally got to my area where I want it to be. And let me make the line even thicker for you guys once again. This right here is where I was looking to enter in. Now you can see, guys, it whipped it during the London session before it started to drop. I'm looking for this thing to plummet all the way down. Literally like 300 pips, only risking 25 pips, almost 400 pips on this one setup. Now with this, here's what's going to help you when it comes to even understanding the different types of traders, okay? Without going to a full training of scalpers, etc., such. When you understand market structure, okay, the one common question I always get is, well, how long should I be holding the trade? So the market's doing this, okay? It's pushing up, boom, boom, boom. If we get into this trade setup, let's say right here, okay, and the market's starting to take off. It's pushing upwards, boom, it's pushing up. Now, many of you guys know we trade with something called a stop loss. My stop loss is probably right here, okay? As the market's pushing upwards, I'm gonna relatively keep pushing my stop loss higher and higher, okay? Higher and higher so I can secure profits. So I may push it here and put it right below this previous low. And I'm referring to right here. So the markets continue to push up. When it retraces, I know it should continue pushing up. Why? Because in an uptrend, this low is supposed to be relatively higher than this low. So I know in the event the market does this, if this does not occur, it goes from here and it shoots downwards, I shouldn't be looking for the market to continue uptrend. Now I should be looking for lower highs and lower lows. So if I'm getting to a trade setup, I'm looking to execute right here for a sell as it pushes down, it's going to continue going, and I can keep moving my stop loss further and further in profits right below the previous point of reversal. Okay, I'm gonna go through another example showing the candles. Okay, so let's use USD CAD for example. Okay, so watch this, guys. Okay, so what trend is this currently in right now? Uptrend or downtrend? Uptrend or downtrend? And why is it in a downtrend? What do we see that's allowing us to believe we're in a downtrend? And the answer I'm looking for is not, it's just going down. Yes, lower highs and lower lows. So check this out. This is a lower high. That's a lower high. Oh, not my magnet. That's a lower high, lower high, lower high. Let me make it easier for you guys' eyes. You're probably like, what are you pointing at? There, there, there. So as long as the retracement doesn't pass these green marks, we're in a downtrending market, right? Now, it's continued to do this. We're also seeing the lows get lower and lower and lower and lower, okay? In a downtrend, I highly recommend you write this. This is probably one of the most important things when it comes to market structure, because I didn't even learn this until this past year. On a downtrending market, okay? On a downtrending market, as long as we are always getting lower lows, okay? Sorry, not lower, my apologies. As long as we're always getting lower highs, my apologies. As long as we're always getting lower highs, we are in a downtrending market, okay? So as long as the retracements are getting lower and lower, we're in a downtrending market. On an uptrend, as long as the higher lows are getting higher and higher, we're in an uptrending market. I'll give you guys an example of that in a second as well too, okay? So watch this here. Market's going lower high, lower low, 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 lower high, and now we're playing back and forth here, okay? Now watch how the market starts to move, okay? We're getting lower lows, very minor lower highs, okay? Remember, as long as we stay below these green lines, we are in a downtrending market, okay? Someone may even consider this as a lower high, but I don't like it too much. It's too small, okay? But remember, this right here on a smaller time frame is something big. But let's just stay on the daily for this example. Now we're pushing up. Still lower high. New lower high was created because it's still lower than this high. Now we need to create a lower low to continue this downtrend. Look what happened there. We now officially have said we're no longer creating lows. Okay, this low's not being created, but instead what took place is now higher highs and higher lows. Okay, let's continue to watch how this plays out. Look at this. We've now completely taken out this high, this lower high. We've taken out this lower high, and that's where we got this massive candle. And now we're attacking this high. So this is where now comes to play out. Now we're back where the market relatively is. So it's rejected off this previous lower high, but now we're creating higher lows and higher highs. So in an uptrend market, now we should be looking for buy opportunities, okay? On a daily time frame, we may not stay here. We probably drop it and say, okay, cool, let's go to the 4 hour. What do we see on the 4 hour time frame? On the 4 hour, the higher highs and higher lows are looking a bit more obvious. looking a bit more obvious. Takes off, retraces. Once you can start to train your eyes on avoiding to look at it as candles, and you can see it as just straight lines, it's going to help you to better understand what the market wants to do, okay? Now, here's the next component I want to go into showing you guys with this, okay? Always understand this. The market is always looking to do two things. Rebalance itself and seek for liquidity, okay? Two things. It's always looking to rebalance itself and seek for liquidity, okay? So in knowing this, let's go back. Let's go back to our replay. So check this out, guys. Oh, it's not letting me do it anymore. Let's go back, replay. Let's do here. Okay. So watch this. When we see massive candles like this, okay, ultimately, there's one that occurred previously that is looking to rebalance or it's looking to destroy something. Okay, what is this candle rebalancing? This right here. You see how we just got a massive candle that just took off to the downside, right? This candle's come back to rebalance the markets. What you're looking for in every candle, ladies and gentlemen, to know we're done and continue to move forward is we want this next candle when it forms, let's say it's like this, and we get a wick that way. We want a wick to cover all of this that was left wide open. So we're looking for this wick to cover all of this. If not, we're leaving the market open, okay? So as I continue, look at this. All of this is either seeking something or it's rebalancing something. Now, when you get massive impulse moves like this is going to help you understand market structure, okay? When we get massive moves like this, I can let this play out so it's fully. Always understand the market's going to do three things, the three C's. You're either going to get continuation, you're going to get correction, or you're going to get consolidation. Okay, continuation, correction, or consolidation. Okay, so you guys can see here, massive impulse. We got the correction, right? Because we got to clear up all of this open thing that left imbalanced. We have to clean it up. You're gonna see this take place even on smaller time frames. So I could even go to, let's go here actually. Delete 24 hour. So we see all this right here, okay? Grab my tools. This green candle massively shot up, okay? We need something to come back and rebalance. So we've left this gap open within this area here. We need something to come back and fill this. So if you ever wonder sometime, you're like, hey, well, how does educators know where the market's looking to go? At some point, it has to come back and rebalance and fill this. Okay, right now we may be on an uptrend, but at some point when it's looking to reverse, this might be the end point before it pushes back up for an uptrend in market. So we get to see here how the market shot up, it tapped back here, and now it's just playing along. Even here, this got played into right here. So still, we have all this that still needs to be filled in as well. Because the market's always looking to rebalance itself, okay? Now, here's what I mean by when we say it's looking to seek liquidity, okay? Now, without going to a whole strategy lesson, let me, let's find something I'm currently looking at. Here's an example. What trainer was this? Oh, okay, that was that. Cool. So I can, I'll make it more even easier for you guys. Perfect. So look at this here. We're on GBP AUD, okay? And I go to a clean chart so it's easier for you guys' eyes. Looking at this here, we're always taught a few different things. We're taught looking for support and looking for resistance, where the market rejects off of and then pushes off, right? It's gonna bounce down, hit it like a ball, bounce back up. Hit the ceiling, bounce back down, okay? Now, in knowing this here, ladies and gentlemen, once again, without going into a full history lesson or a session, there's a lot of money sitting here, okay? So the market isn't looking to rebalance itself or seek liquidity. Everyone here is ultimately looking to do one thing. So we're all taught the same thing. YouTube videos were taught by individual people, coaches, that when you find a support, you're looking to take a buy, right? So the average person is looking at this one here, for example, and saying, okay, I want to take a buy off of this area here. Okay, I want to take a buy off of this area here. And whatever you put your stop loss at, who knows? Maybe put it just right below the box, who knows? Okay, and your take profits all the way up. Institutional players are going to come into the market and stop you out. So if you look at this candle right here, this big red candle, it pushed through, cleared everything here. It's seeking liquidity. It found liquidity, cleared it all out. Everyone's stop loss got hit, and then the current move occurred. Okay, but what I teach you guys is looking to see liquidity and then rebalance itself. So look at this, massive takeoff. It left all of this wide open. So we know at some point it's going to come back within this area. But based off of this right here, we're looking for our entry into the market. Now I won't go into that right now, but based off this, let's come back to my markup. You can see here why we're looking for the entry based off of that institutional sponsorship candle, okay? Just understanding the direction of the market. Now, you may say, well, Andre, why aren't we going for sells? Well, look in which direction the market's going. Higher high, higher low, higher high, higher low, right? And then we got the sideways looking movement, but higher high, higher low, higher high. So I'm looking for that lower low to be formed within this area relative to the fib mark. Now I'll go into a quick fib thing, which will help you guys as well with market structure, which I truly believe will really, it's kind of a bit more advanced, but I want to give education to some of you guys that are more advanced. When we're looking for moves, okay? Someone type for me in the chat box, type for me a currency pair. Type for me a currency pair in the chat box. I can just jump on it so it's not just like me choosing my own. Euro AUD. So we're looking at Euro AUD. Once again, when in doubt, zoom out. First thing I always do is I just always end up zooming out. I'm looking. So on the daily, we had significant lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, and then boom. You can even start to view it by looking at it like this. I don't really use these, but give an example, the market's pushing up, okay? So to give an example, I'm using fibs. This is what's gonna help you guys with understanding market structure as well too, okay? Once again, if we're looking at the market, and let's say I draw this here, okay? You may say, but Andre, this high is not higher than that high. This high is not higher than that high. How is it an uptrend, right? Once again, on a downtrend, the most important thing is that the retracement, the lower highs are getting lower and lower. On an uptrend, the most important thing is that the higher lows are getting higher and higher. This is the part that I learned literally in the last like 6 months, and I was like, oh my gosh, this just changed the game. And sometimes we're looking for the higher high, but it's like, why are we even looking for the higher high? We're not executing off the higher high, right? On a downtrending market, you're trying to execute a trade off the lower high. Check mark, check mark, check mark. On an uptrend, you're looking to execute your trade off the higher low, okay? You don't want to enter halfway here or halfway here at the top. No, no, no. We buy low and we sell high, okay? So going back into this here, with 8 euro AUD, we're understanding, ladies and gentlemen, that let's go back to our horizontal array. Okay. This low put in this high. Okay. This low right here put in this high. This low put in this high. This low put in this high, and this low put in that high. Okay. So let's go back to the relative most important ones now. The last relative higher low and higher high. So now as we are trading, ladies and gentlemen, nothing else matters except knowing we are in a uptrending market. We got our last higher low and we got our last higher high, at least for now. We need some type of retracement to kind of see where we're actually looking to do a pullback, because it might just continue shooting up. So now this is an area where now I say, okay, cool. I'm currently right now on what time frame? I'm on the daily time frame. Okay. Let's say I have this here. Our premium levels we're looking for entry is somewhere within this area here. Okay. So this low put in that high. Now let me drop my time frame. Let's go to 4 hour. Sorry, let's put back the lines. My apologies. I want to keep these lines here. Now let's drop to the 4 hour time frame. Okay. We're still having the same effect play off. Higher high, higher low, higher high, higher low. Randomness happening here, which is very important. Higher high. Now we're looking for that significant higher low. Okay. Let's drop time frame even again. 2 hours. Okay. What I'm looking for, ladies and gentlemen, is I'm looking for an institutional sponsorship candle. Something that shows me the market is looking to shake people out. Because once again, the market's always looking to seek liquidity or rebalance itself. So now I'm on the 1 hour time frame. And where should I be looking for this? Once again, I draw my fib from top to low to bottom. Sorry, from bottom to top. I'm looking for something within this area. Okay, something within this area. Sometimes maybe even farther down like here. Understanding price. When should I be looking for something to occur in this area? Understanding time. So I'm looking for something to occur during London session because I'm trading the euro. During London session, not of course not yesterday because it passed, but somewhere going to be, and let's make it easier, it should be every 6 candles on the 4 hour. Where is my vertical line? Perfect. So 1, 2, 3, 4, 5, 6. That'll be London session. 1, 2, 3. 1, 2, 3, 4, 5, 6. London session. 1, 2, 3, 4, 5, 6. London session. So I'm looking for a retracement within this area during a London session. As of right now, we are nowhere near there. So this is now why we move and go to another currency pair. Right? What's the second one that was dropped in the chat? GBP CHF. The Great British Pound to the Swissy. Let me put this back to a lower background because it's really bugging my eyes. Okay. So when in doubt, zoom out. So let's take a look at the daily. Yes, this is my strategy. I can't really say my strategy, but we've all learned from someone. But this is how I trade, yes. So let's take a look at the weekly. What am I looking at? Downtrend, uptrend here, downtrend, broke structure here, daily. Sorry, let me go back. Somebody like, what do you mean broke structure? So lower high, lower high, lower low, lower low, lower high, lower low, lower high, lower low. This is considered breakup structure. Okay. This is considered breakup structure because the market broke and it's no longer forming lower highs and now broke to the upside. So I now know I'm looking for buys. Okay, once structure is broken, I'm now looking for buys. But we're still on the weekly time frame, okay? So let me drop to the daily. Daily, pushed upwards. Now we straight consolidated. We're just moving sideways. Let's go on the 4-hour. 4-hour, we're getting some type of lower high, lower low being formed. Why do I see this? Let's take off my session so it's not bugging you guys' eyes. Lower high, lower low, lower high, lower low, lower high, lower low. Now check this out. Example of what I'm talking about. This right here sticks out very impressively. I know some of you guys who trade institutional, it stood up to you as well too. This right here. Ding, ding, ding. Why does it stand out? This stands out because, once again, we're taught to look for support and resistance. This came and cleared this area. On a downtrend, we're supposed to be getting lower highs and lower lows, but this cleared and knocked that out. So I'm now looking at that last buy candle for my sell move. So now, in looking at this candle, ladies and gentlemen, I'm talking about this green one right here, and looking at this one right here, I'm looking to figure out which time frame holds the most volume to find my entry point. And maybe we have a trade set up tonight as well too. So let's drop to the 2-hour. Boom, look at that candle, so much volume. This is probably the candle we're looking at. Let's go on the 1-hour. 1-hour looks even better. The smaller the time frame we can go on, the smaller we can make our stop loss. Okay, 30 minutes. Still got it, nope. I like the 1-hour. So now, once again, I'm looking for premium areas, right? All the way up here where I draw my fib. And we're looking to get in based off the 50% to the open of that candle. So we're in a downtrend, so we're looking for sells. So 50% of that candle, our stop is gonna be right above that candle. It's about 20 pips. Make it safe, 20 pips. And we'll be taking this to the low. So I'll be at 1 to 10 risk to reward ratio on this trade setup. So we'll be looking for the market to retrace into this area, give us that next significant lower high, and then take it to the downside. Okay? So that's what we're looking for. This is how you understand market structure and use it to your advantage, right? Since it's so sell limit. Now, sell limit, sure, if you want. Myself, I personally wait to see how the market reacts. I personally hate using pending orders when I don't have to, okay? The only time I use a pending order, if I know, for example, we're within London session and I'm about to fall asleep, I'll set my pending order and I'm going. Or if I'm about to jump onto a flight, or I know I got a bunch of calls I got to take care of. Only during those situations will I say to myself, you know what, let me set the limit and go back. Otherwise, I want to see how the market reacts. Now, here's why I say I want to see how the market reacts. We may miss out on this setup altogether because maybe we don't get the play off the 50%. Maybe we get the play off the open of that green candle. I hope not, because I'll be able to put us at a bigger stop loss. And this is where risk reward is super important. Look at this now. It's the exact same TP. Look at this. The exact same move, but this one's a risk reward of 1 to 5. Or 5 to 1, whichever one I'm going to put it. This one is 10 to 1, 1 to 10. Risk 1 apple to make 10 apples here. Risk 1 apple to make 5 apples here. I like the 1 to 10. So I want to kind of see how the market plays off when it gets into this zone area here. I want to wait and see how I get some type of reaction, whether maybe I get like a long wick like this. I'll take a look into understanding what's happening with the BXY, where I may look at the British pound index and say, okay, cool, this is looking up, is doing this. I won't go into that lesson right now, but guys, this is ultimately understanding how market structure works and using it to your advantage. Anyone have any questions you guys want to ask? Actually, I'm going to stop the recording here so I can just end this here at 45 minutes and help you guys out answering questions.